Binance has committed $1 billion to a crypto industry recovery initiative to restore confidence following the collapse of crypto exchange FTX. Several other crypto companies have joined Binance's efforts and committed capital for the recovery fund. The announcement states initially, Binance will commit $1 billion to IRI-themed investment opportunities with an intent to ramp up that amount to $2 billion in the near future if the need arises. So far, Jump Crypto, Polygon Ventures, Aptos Labs, Animoca Brands, GSR, Chronos, and Brooker Group have also committed to participating with an initial aggregate commitment of around $50 million. And Binance expect more participants to join soon. Each participant has set aside committed capital in stablecoins or other tokens. Binance explained that it will be looking for projects characterized by innovation and long-term value creation, a clearly delineated and viable business model, and a laser focus on risk management. What makes this initiative unique is the collaborative approach to restoring confidence in Web3. The mandate of this new effort is to support the most promising and highest quality companies and projects built by the best technologists and entrepreneurs that are facing significant, short-term, financial difficulties. The announcement further details that the initiative is expected to last about 6 months and will be flexible on the investment structure such as token, fiat, equity, convertible instruments, debt, credit lines. Binance is targeting $1 billion for a previously announced recovery fund for distressed crypto assets. CEO Changpeng Zhao said in an interview with Bloomberg TV. The fund will be open to contributions from other industry players. If that's not enough, we can allocate more. Binance CEO also stated that Binance holds all of its clients' crypto assets in segregated accounts which are identified separately from any accounts used to hold crypto assets belonging to Binance. Binance uses Binance's own wallet infrastructure to safeguard user assets and Binance's own assets. When we say proof of reserves, we are specifically referring to those assets that we hold in custody for user. They kind of gave evidence and proof that they have funds that cover all of their users' assets in one-to-one ration as well as some reserves. More specifically, Binance provided a snapshot of account balances and its own Bitcoin reserves on November 22, 2022. The exchange claims it has 582,485 BTC in its reserves, while its users have a net balance of 575,742 BTC, giving Binance a reserve ratio of 101%. Users can also verify their personal Bitcoin holdings on the trading platform through a provided link or against Binance's own Merkle tree, a cryptographic tool that consolidates large amounts of data into a single hash. As explained by Binance, after logging into the exchange, users can click Wallet, followed by Audit, which will generate a unique record ID that confirms assets are covered and as well as confirming users' asset balance at the time of the audit. Binance went on to say it also plans to involve third-party auditors to check its proof of reserves system and to implement zero-knowledge proof technology, a move aimed at improving privacy and robustness, and proving the total net balance of each user is non-negative. The news comes in the wake of the collapse of rival exchange FTX earlier this month, which prompted many other trading platforms to pledge to provide full transparency through Merkle trees. Kraken CEO has refuted this by stating that Binance Proof of Reserves is pointless without liability. According to Powell, a complete proof of reserve audit must include the sum of client liability, user-verifiable cryptographic proof that each account was included in the sum, and signatures proving the custodian's control over the wallet. The Merkle tree is just hand-wavy bullshit without an auditor to make sure you didn't include accounts with negative balances. The statement of assets is pointless without liabilities. Powell called out CoinMarketCap in the past for sharing incomplete proof of reserves, as it lacked cryptographic proof of client balances and wallet control. He reiterated that reserves are not the list of wallets but assets minus liabilities. Though, all these sound good, but there are a few glitches that Binance would need to address for their users before they can come out completely clean in the public's eyes. Let's first understand what proof of reserves is. Proof of reserves is the idea that custodial businesses holding cryptocurrency should create public-facing attestations as to their reserves, matched up with a proof of user balances, which is liabilities. They are showing you one piece of the equation, which are assets, but it's meaningless unless you see liabilities. In this case, to know if they have positive or negative equity. Large amount of asset really don't mean anything without the context. To prove liabilities, it requires an auditor to engage in a full assessment. For instance, exchanges can omit certain liabilities to cheat a proof of reserve attestation. Binance has released its proof of reserves system, which allows users to verify that their deposited cryptocurrency has been included in an audit. The problem is that there has been no public disclosure of a third-party audit of Binance's liabilities to users up until now. Not that we are aware of the same. Binance claims that in order to show that Binance has all user assets in 1:1, They have built and implemented the Merkle tree to allow people to verify their assets within the platform. This way, people will be able to confirm that their funds are held in 1:1 and they can have it verified by a third-party audit agency. The record ID enables you to independently verify that your account balance was included by the third-party auditor. But it raises questions. Where is the liabilities report inspected by an auditor? Who is the auditor? We don't know because Binance hasn't done any of this yet. Binance has announced plans for third-party audited reserves but has yet to produce anything from an external auditor. So why are they portraying that they have got it audited? Why would they show Monero? From what I've seen, there is no official Monero contract in the BSC chain, and this website is for showing the proof of assets for Binance tokens that Binance issued. This doesn't seem to be a proof of reserves, it's just the backing of pegged tokens. Think about this. What happens if Binance takes loans out against these assets though? Like, what's stopping them from getting a loan against their Tether holding and using that to buy a large chunk of that Bitcoin holding? And then a loan out against that Bitcoin holding and so on. I am not saying that they have taken loan, but what will happen if they do so? Binance has not produced the very form of proof of reserve, meaning they haven't disclosed any report or data from a third-party auditor that would prove that the claimed liabilities are faithful to reality. Merkle trees tell you nothing without proof of liabilities. And now Binance is claiming that they have released a proof of reserves system. Also, $12 billion of a stablecoin that likely isn't backed by anything. I am not sure if that is backed by USD. If Tether crashes, what is going to happen to all Binance users? Their biggest holding is 21 billion BUSD, which is like Burger King saying the majority of their assets are $21 billion worth of Burger King coupons. I am sure that Binance must be having debt. It's a multi-billion-dollar company. It will owe money to employees, contractors, service providers. Having debt or liabilities are a completely normal function for running a business. The liabilities side of its balance sheet could be vast or could be tiny, or it could be full of terrible, unserviceable loans paid out to the executives to buy mansions in the Bahamas. We have no idea because Binance are not audited and not regulated. The reserves are meant to be held in 1:1 with all user deposits. If user deposits are 35% BTC, 10% ETH, 20% BNB, and 35% BUSD, that's what the reserves should be. If so, it matters not if the prices of BNB goes to 1 cent or $1 million. The insurance fund is excess reserves, mostly from the profit of the exchange over the years. That is held in case something like a hack were to happen. Those are held in whatever Binance wants because they're not required to be holding anything. It's just beneficial for them to do so and gives users a bit of extra security. In essence, they're saying that your deposits are not only collateralized 1:1, they're actually over-collateralized due to the excess held in the insurance fund. In banking, when a customer deposits $100 into their account, the bank takes the customer money and perhaps loans it out to charge interest. However, the bank is liable for their customers' cash deposits. They are marked as liabilities on their book. Now, whether or not Binance provides the liability side of the equation need to be seen and watched, but as a user, we all need to be careful where we put our funds. As we say, not your wallet, not your crypto. Though, Binance seems to be in a very healthy financial situation, and so did FTX look before implosion. We as customers need to have both sides of the views and take a judicious decision. Hope this video was helpful. If you really liked the video, give this channel a thumbs up and also subscribe the channel for future videos.